Adam DeSanctis. Welcome to MBANow. We have a familiar face with us today, Craig Crabtree of Equifax. We're here to discuss financially inclusive lending. Craig, thank you for being here today.
Adam, great to be with you today.
So as I mentioned, financially inclusive lending, it's important for the entire mortgage industry. It's certainly a key thing that many of us are focusing on right now. What stands out to you and what the industry is doing on this front?
Yeah, Adam, the traditional credit report remains a strong indicator of credit history and past financial reliability. But younger consumers and those building credit may have thin credit files or no credit file at all. So providing additional insights to mortgage lenders by including differentiated data assets along with the traditional credit report helps broaden visibility into consumers' creditworthiness and provide greater access to credit, which helps open doors to home ownership.
You and I know there are many barriers to homeownership right now, and Equifax recently announced the availability of the expanded mortgage credit report. How is that helping to support inclusive lending?
Yeah, it's great. I mean, Equifax is the first national credit reporting agency, or NCR, to make certain telecommunication, or what we call telco, pay TV, and utility attributes available to the mortgage industry to provide a fuller picture of a consumer's financial profile, potentially enabling 191 million consumers. So we have data on 191 million consumers that 80% already have a traditional credit file, but may benefit from additional insights into their financial profile to have greater opportunities for home ownership. And we know, Adam, that home ownership is a foundational step to achieving the American dream and generational wealth, and something that's very difficult for those that are credit invisible to achieve.
Leveraging that data is certainly useful. You mentioned telco, pay TV, and utilities attributes to help. How is that helping to streamline the mortgage underwriting process, and what are some of the impacts you're seeing from that?
Yeah, so one of the pieces that we really looked at through a recent study by Andrew Davidson, who is a leading provider of risk analytics and consulting for residential loans, analyzed U.S. mortgages from January 2019 for consumers with non-traditional credit history. So think young, thin, and no-hit consumers, and found a strong correlation between the positive consumer utility payment history and future positive mortgage payment performance. So the research also confirmed this correlation across a wide range of credit scores for these borrowers, most notably across borrowers from the high end of subprime. So think the credit scores 580 to 619 through lower prime, 660 to 719, who may be more likely to face challenges obtaining the mortgage because of being on the minimum threshold or needing additional documentation, who might have been offered higher rates based on their credit files alone. The findings by Andrew Davidson underscores the value of the telco, pay TV, and utility insights to help create a better pathway for many Americans to establish home ownership.
Looking at that, repayment history, can certainly help lenders make determinations on what, if a borrower's ability to repay in the future. And how do these different data sets help lenders?
Yeah, so the way they really help is they can assist in streamlining a very manual process on building a credit profile when there's a lack of credit information in a traditional file, by automating the delivery of the verified information, which improves efficiency for the lenders, and then the ability to consider these insights in addition to the traditional credit report provides inclusive lending and helps expand the availability of credit to more borrowers. These additional insights are delivered alongside the credit report every single time. There's not additional click or different feature that needs to be clicked on. They're ported over every time at no additional cost to lenders, helping to improve the customer experience and then reduce lenders' costs while enhancing the borrower's experience.
Reducing lenders' costs, I know, given everything that's going on in the industry right now, that is especially important. And what else would you like to add to this conversation? What should our viewers know?
Yeah, it's really, really interesting as we look at the data. Like the majority of U.S. adults have one utility bill, which provides lift with the credit data. And making this data widespread is a powerful indicator of the past financial reliability. The data actually gets even more predictive as you have more and more trade lines, just like the credit data. And most of us, I know me, probably you too, Adam, have multiple trade lines in this type of database on how we spend our money within our household. Equifax is committed to removing barriers to financial inclusion, right? And supporting a number of industry initiatives in mortgage and outside, designed really to provide underserved populations with the same opportunities to succeed and benefits from our nation's financial system and others. So the inclusion of the telco and pay TV and utilities insights to mortgage lenders is just one example of the way that Equifax is promoting greater access to credit. We're committed to helping people live their financial best and understanding that a single financial opportunity can be a critical step to establishing individual financial health and generational wealth, changing the trajectory of families and communities for generations. So we believe more data comes more better decisions, and we've invested billions in our cloud-based technology solutions and bringing these differentiating data solutions to the industries that we support.
Craig, as always, it's a pleasure to talk to you and to hear what Equifax is doing on financially inclusive lending. Have a great day.
Thanks. You too, Adam. Take care.